Hello and welcome to our modern money journey. Just a brief reminder that I am not a licensed professional. This is not investment advice. This is for entertainment purposes only. Alright everyone, welcome back to episode 12 of our Modern Money Journeys Build a Portfolio series, where every single month I deposit $100 into my Webull account, we take a look at the markets together, and then we make a purchase to add to my Webull account. Taking a look at the portfolio, overall we are still up $145. We are sitting at an annual return of approximately 36%. So we've actually come down a little bit on our annual return. We can see that we've gotten a few dollars in dividends since last month. And taking a look at our trading P&L, we can see that our Ethereum and Bitcoin positions are still the biggest part of our portfolio, or two of the biggest positions in our portfolio for growth wise. And then Seagate Technologies has got up in there as well. And then we have Virgin Galactic, Cisco, CRISPR, and Intel all sitting kind of down there, the single to low double-digit gains. And then our ARC Space Exploration Fund, our SLVO Credit Suisse Silver ETN, our Medical Properties Trust REIT, and Barrick Gold are all negative. So let's take a look at the markets and find out why we're still doing good, but why things have come down. And right off the bat, we can see that Bitcoin is down quite a bit. It's down today, and it's just down quite a bit. It's in a pretty low place. And Ethereum has taken quite the dive. We're now sitting under $2,000. We were at one point up over 4,000. So it's just the way it goes, though. So, lots of volatility in the crypto market, and we appreciate that volatility. That's what makes us money. But let's go over and take a look at TradingView. The S&P 500 has pretty much just kept chugging along. It's not really done much the last month. The Dow Jones, we said, last month it looked like it was rounding over, and it's basically recovered from that. However, it's back up to this, sort of resistance area. So we'll have to see what happens, and it sort of looks like it's putting in another top. Going over to gold. Gold dropped and then has tried to climb back up over the last month, but it's still sitting in like this high 1800 to 2000 range over the last year. So not too much movement in gold. Silver, same thing. It dropped, but instead of recovering, it's just kind of sat flat, but it's still sitting in this mid 20s to low $30 range that it's sat in the last year. US dollar index has actually recovered a bit. However, we know this is a joke because all currencies are losing their purchasing power. So this is just saying that the dollar is done a little bit better in comparison to the other things they're losing. So it's like the, smartest kid with Down syndrome, as they used to say. But so what's the word in the stock markets and just in the markets in general? Well, it's inflation. Everybody's talking about inflation. And one of the narratives that's being pushed is that that this is, as they say right here, reflects robust consumer demand, boosted by widespread vaccinations. And others will talk about how this is also partly due to supply chain bottlenecks. Those of us that actually pay attention to markets and economics and fiscal policy and monetary policy know that this inflation is not from robust consumer demand and supply chain bottlenecks. That's a bunch of bullshit. We know that when you print trillions of dollars and pass it out to people, prices of things are going to go up. We can see here the M1 money stock, back early 2020 was 4 trillion. Now we're almost to 20 trillion. You are going to 5x the monetary supply, and then tell me the reason that prices are going up is from healthy demand and supply chain bottlenecks? I'm not fucking retarded. I know how to see what's actually causing the inflation. So we have these grossly false narratives being pushed about reality, and things like this tend to scare me. Everyone's talking about inflation, and inflation's here. There's no doubt about that. CPI's high. If they wouldn't have manipulated the way CPI's been done in the past, then I guarantee it would be showing an even higher CPI than what the current metrics show. But that's all, videos for a different time. We know what's causing the inflation. Lots of money being poured into the system. Lots of money being printed and poured into the system. This money will go somewhere. Yes, a lot of it got handed out in the form of checks to consumers. That's driving the inflation. But the overwhelming majority of it is going to end up in the hands of money managers and the financial system itself. So we need to try and take a stab at where we think a lot of that money is going to go to. I personally think a lot of it's going to go to safe haven assets, gold, real estate, and it's going to go to stocks or equities that present a high likelihood of outperforming inflation. When we start to get into these times where everybody's talking about the same thing, I also try and look for the counter narrative. And no one is pushing back against the inflation narrative more than Cathie Wood. Cathie Wood is one of my heroes. She's highly intelligent, and I find her arguments against this long, persistent inflation argument interesting, and they all revolve around growth in technology. And I myself am a big fan of growth in technology. So taking a look at what Cathie Wood has said recently, she's talking about how digital wallets, aka the crypto economy, and Bitcoin, Ethereum, Cardano, Chainlink, Uniswap, the entire crypto economy, and genomics are the two next big sectors to boom. And I completely agree with her here, because both of these sectors stand to benefit from lots of money printing, and there is a lot of investment fund money going into fintech companies which are working on this digital wallet crypto space. So we've already got, if we go back to our our account, let's go to just our positions view. We've already got our Ethereum and our Bitcoin holdings, so we're in on that crypto wallet or digital wallet boom explosion. We have the base assets that relies on. Recently we bought into CRISPR Therapeutics, which is actually a pretty decently, a big chunk of our position. However, we're going to add to our genomics area of our portfolio this month. And we're going to actually add a few companies so that we can just have a nice, robust genomics portion of our portfolio, and then we can move on and start looking at other areas to integrate into our portfolio or to balance out our portfolio. But I believe a couple of these genomics companies are potentially good buys right now. So let's take a look at those. The first one is Pacific Biosciences, ticker symbol PACB. So it's recently dropped from around $36 down to $26, and after seeing a nice pullback like that back into a range of somewhat healthy support and resistance, this is a decently good position to buy a share and get into the company. So we're going to go ahead and make this a market. We're going to make it a buy. We're going to do one share. We're going to place our order. And we purchased one share of Pacific Biosciences. Another genomics company that I've been looking at that I find very interesting is Beam Therapeutics, ticker symbol BEAM. And taking a look at its price chart, we can recently see that it as well has dropped back down into an area of support, long time support. But it dropped clear from 135, 138 down to low 80s. So it's very likely that at some point in the future we'll be revisiting these types of prices again. Maybe not in the next month or two, but sometime in the future. So let's go ahead and do a market order. We're going to do a buy. We're going to do one share. We're going to place that order, and we're going to buy. And now we have one share of Beam in our portfolio, and we're going to look at one other company to add to our portfolio and add more specifically to our genomics positions. We're going to look at Editas Medicine, ticker symbol EDIT, EDIT. So it too has recently dropped from its high of around $60 down to $40, and it's back in an area of relative support. So let's go ahead and do a buy. We will do a market order. We'll do one share, and we will place that order, and we will buy, and we have successfully bought our share of Editas Medicine. So let's go back to our account, and we can see that we've added Editas, Beam Therapeutics, and Pacific Biosciences, or PacBio, shortened to PacBio, to our portfolio. So now our cumulative genomics positions, CRISPR plus PacBio plus Beam Therapeutics plus Editas, is actually rather large. It's about 26%, 27%, or a little bit over around in there, of our total portfolio position. So we've got a good position in the genomics area. Next month we'll do something a little bit different. Alright, all you bulls and bears, we'll see you next time.